Welcome back. Hope you're having a good morning because the equity markets are likely to be under some pressure. Global cues in a bit of a tizzy. Yields spiked up. We had crude oil prices that went up and the dollar index was stronger as well. And putting all those cues together, the GIFT Nifty suggesting we pull back more than 100 points. But individual stocks, well, plenty of reactions is what you're going to see. And help us out with some fundamental analysis. Dipan Mehta, director at Elixir Equities, joins us on the show. Hi, Dipan. Good morning. Always good to see you in Dipan. Let's discuss a couple of stocks then. IndusInd Bank came out with its set of numbers. They look quite good. And they're guiding for better things as well in the second half of the year. Your view on the stock?
Yeah, good morning, Nigel. Thank you for having me on your show. I think great set of numbers from IndusInd Bank. Last 2-3 quarters have been exceptionally good, especially under the new management. And valuation-wise also, there's a lot of comfort. So I think that from investors' perspective, this is a good stock to buy. And first, the disclosure, we and our clients are invested in IndusInd Bank. And these are really blue sky scenarios for banks per se. Credit growth is good and NPA cycle has not turned bad, so the credit costs are lower. And banks just need to invest in technology and make sure that the credit growth is in line with industry or slightly better. And of course, the operating leverage benefits are also coming through for most of the banks, including IndusInd. So very positive IndusInd Bank. I think there's a case for re-rating of the valuation ratios.
Okay, got that. Dipan, hi, good morning. Your thoughts on Astral, which reported numbers, and Polycab, which reported numbers. Polycab seemed like a beat on all accounts. Astral was more in line. But from a stock perspective, what's your sense?
Yeah, I think very good set of numbers from both companies, especially Astral. Quite impressed with the paints and adhesives growth as well, because that's going to be the real engine for Astral going forward. They already have a dominant position in the plumbing side, but these are the new emerging businesses. How they are shaping up is very important. The only issue with Astral is amongst the most expensive building material stock, even more expensive than maybe Asian Paints. Having said that, I think Polycab also very good set of numbers. And really the cable division is firing on all cylinders for Polycab. The only disappointment is that the appliances business, which Polycab is focusing on, the value-added businesses, those are not growing as fast as the cable business. But nonetheless, I think the company is on a solid footing. Valuations, I think, are still more reasonable. So I would say that both are, if you have them in your portfolio, remain invested. But from a fresh investment perspective, I think, the valuation do not justify and there may not be adequate margin of safety.
Okay, so the risk reward is not favorable for a fresh entry into either Astral or Polycab, given the current high valuations. Wipro is a stock on our radar. They reported their Q2 numbers. Numbers came post-market hours. It's a weak Q2. The top line declined by 2% quarter on quarter, and the company has guided for things to deteriorate further in Q3, guiding for a -3 to -1.5% growth in the October to December period. Listen in to what the management had to say about the company's performance, what led to this weakness.
The revenue has been, at a little lower than expected. And, while in the guidance still, the reality has been that, the market has continued to be a little, difficult over the last few weeks. We have seen, same volume of reduction of discretionary than, a little more than what I would have anticipated.
We did indicate that our margins will remain range-bound in line with what we have delivered over the past few quarters. There is a salary increase which will be rolled out effective 1st December. So we will have 1 month impact of those salary wage hikes. And in Q4, we will have 2 incremental months compared to Q3. How much and the quantum, it'll all depend, but it is likely to remain in the same range as what we've done.
We have not onboarded freshers in H1. We had made offers last year and we need to onboard them as the market improves. So far, we have not onboarded freshers in this year.
In the communications sector, we are seeing still a certain hesitation to engage on discretionary spend. Maybe discretionary spend would be in the 20-25% of our portfolio, right? not all consulting is discretionary spend. Some technology is discretionary spend. It's not that simple to just characterize this category. Our guidance for Q3 include the fact that, we are seeing furloughs, as you know, in Q3. Typically, this is when they're coming, and there will not be smaller in volume this year than they were last year.
That's Wipro. Another important thing that they said in the conversation was, we asked them, what is your dependence on the discretionary spending? What we call the discretionary spending. Most IT companies are unable to quantify that. But the company said that approximately 20 to 25% of their portfolio today is dependent on discretionary. So it's part of your consulting business, etc. So only when the discretionary demand turns around, spending starts on discretionary projects, then perhaps Wipro could see a bit of an uptake. So that was an interesting takeaway. Dipan, amongst the IT companies, and most of them have reported, at least all the 5 large cap IT companies have reported. We've got a few mid cap IT companies. Which one stands out to you, and which one would you recommend a buy on at current levels?
Well, disclosure, we and our clients may be looking at buying that company, but I saw that Newgen Technologies, their interview yesterday, and it's a company we've been tracking for a long time. Unfortunately, we have missed the bus over there. But clearly, I think the company has gone from strength to strength, and its business model is largely focused on domestic market, partly coming domestic market and other markets. And it's slightly different from some of the other typical software companies per se. And the way they were speaking about the large order wins and the large contracts they have got, I have a great faith that this company will do really well going forward. The only issue was high debtors, but that also was coming off. Having said that, I saw persistent numbers, I saw Coforge numbers. I mean, they're good, they're better than industry standards, but nothing, which will, make us stand up and say, look, this is really going to be an outlier and it will perform exceedingly well going forward. I think the pain in the IT sector is being felt across the board. And this may last for a quarter or two, and unless you have a contrarian type of investment strategy, it does not make sense to invest in any of the typical IT companies, be it large cap or mid cap. It's better to just wait and watch at this point of time. And the geopolitical issues, I think, certainly will be on demand and will push the demand revival maybe for a few more months or quarters. So things are not looking that great for IT stocks, according to us.
Okay, not looking great for IT stocks. Dipan, you told us about IndusInd Bank, you like those numbers, but Bandhan Bank, asset quality seems to be an issue out there. Those numbers didn't look very, very good. Your view?
See, I think, Bandhan Bank clearly has disappointed the market big time, and it came with a lot of promise. It was the first bank which went from a microfinance NBFC to a bank, and they tried to scale up other businesses. But somehow, even in the microfinance side, they have been, hit with large NPAs, which are unusually high. Maybe it's geographical concentration, maybe it's the lending practices, I cannot say. But even when you compare Bandhan Bank to some of the other microfinance banks, stroke NBFCs, the performance is certainly not that impressive. Valuation may be cheap, but that's because of high NPAs in the past, and it also had a loss quarter. So when you have so much of choice in the banks, it's best to avoid Bandhan Bank. We spoke about IndusInd Bank. I thought Federal Bank also came with a great set of numbers. Bajaj Finance also now getting into that nice valuation comfort zone as well. And if they can maintain these kind of growth rates, I think it'll start to outperform over the next 2-3 quarters or so. So I think there are many choices, best to avoid Bandhan Bank.
Dipan, have you looked at out of the blue question, but a company called Tega Industries? It's an interesting company. I remember speaking with them here on the program. They're in the steel mill ancillary kind of support. They provide lining for steel sort of furnaces. Have you looked at it, Tega?
Similar to what AI engineering does, if I'm not mistaken. And I think these are great times for such companies. A capex cycle reviving in India, and the way the rupee is going, there's a huge export market also opening up for such companies. Steel prices also have been pretty much curtailed. And these are great value-added products and niche products. And it's just a matter of convincing the customers to go for such options and such solutions given by these companies. So very positive on such businesses. I don't have a handle on the valuation, but if it is reasonable in that 25 times kind of a zone, or rather I would say PEG of less than 2, then certainly the stock is worth looking at.
Okay, just one more point, Prashant, on this company. You know, it's more involved in the OPEX, not in the CAPEX.
CAPEX, yeah.
So if no new CAPEX is not added, it's still okay because you have to change the mill line.
There's a lot of replacement demand, basically.
Exactly. So that's one factor.
I remember speaking with them, and I noticed that yesterday it was up 10%. I don't know if the results came or what, but it was up sharply yesterday.
Dipan is still with us. Dipan, the big daddy comes out with its set of numbers. What do you expect from it, and what's your pick from the cement pack? I don't think you are very positive on the cement names, but your view.
No, I think Ultratech will come with a great set of numbers. It's a sweet quarter for the entire cement sector. Volumes have been exceedingly strong, prices have been stable, and a lot of the benefit of the lower raw material costs, lower power and fuel costs, transportation costs will flow to the bottom line. So I think it's going to be a great quarter from that point of view. Maybe next quarter also will be phenomenal anyway. Next 2 quarters are very busy for the cement and industry and seasonally very strong. So you could see cement outperform in the short to medium term, but longer term prospects are not looking that great. The way capacity buildup is happening, I'm so sure at some point of time there could be a glut and there could be greater price wars as well, which may keep margins depressed. But I think next 2 quarters look very impressive and very strong for the cement industry. And Ultratech being the largest player, I think they should report very good set of numbers.